Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not necessarily indicative of future results.
So stressful when the world's on fire. Good God. I can't look at this, guys. Like, my strategy is you buy it and you hope that you got a good spot. Yeah, but we all think you're crazy. You don't fight this. No way. The markets are freaking out and you don't think that anything is wrong? Come back tomorrow and I'll lose it all. Should be fun.
Good morning, everybody. It is Friday, right? Am I crazy, or is it really Friday? I have to double check. It is definitely Friday, the 18th. And well, you know, it's kind of been a weird week because there is definitely that sort of late summer, low liquidity kind of quiet action. But interspersed within that, there's been a lot of really extreme moves and quite a bit of strategic, back and forth in, especially in the treasury market, as you've got crazy stuff going on in China. You've got the Bank of Japan possibly doing some currency intervention, and it's just been a wild week. I'm kind of been looking back on my trend because it hasn't been very good this past like 2 or 3 weeks. Maybe it was a little delusional to think that I would be the informed one, in this kind of a situation, because there's a lot of just like random stuff going on, right? So we're going to be careful today. But with that said, I am seeing, just coming in here for the very beginning, there's been a decent amount of action just so far in the first 15 minutes. So, coming over to the charts. So you can see here in the treasuries, they were really looking at the abyss. Actually, if you come and look at like on the daily chart, okay, like, it's almost as low as it was last October, right? So they're kind of in this tail. There hasn't been a daily close below this, like what, 109.10 half. Okay, so they were kind of looking into the abyss, but they didn't go for it. In fact, that's kind of what got me yesterday, was I really thought they were going to go for it, and kind of fizzled out even after later in the day. So coming back later in the day, they did have a decline after we left, but it didn't result in the big down that I maybe thought that we would have. And in the overnight action, there has been a reprieve. And again, there's things going on in China and Japan and so forth that may be why Treasury is taking that big step back. And by the way, that like some of the biggest action has been in this overnight Asian session kind of time period, right? Okay. And now we are having a decline here off of the open. S&P 500 a little bit lower again, and just kind of selling. Again, this was like, it didn't happen until late day. Didn't really come in until later in the day. So not a huge change in oil. Silver and gold. Well, silver still looks okay, but with rates kind of being high, it's kind of ugly for the precious metals. Copper, they're doing okay. I mean, they're about sideways for the past 2 days. And then we come over to Bitcoin. Holy crap. So yesterday there was some downside. I think there was 2 headlines. One was like Circle basically saying, hey, Tether is like printing money and that's not cool. And another story was Binance was getting out of a certain business. So we kind of saw like this decline, but it looks like that during the break that there was another push in Bitcoin lower that did quite a bit of damage. So you are now to like break even points. We'll see if larger players puke. This the whole thing is like, you got Michael Saylor out there who was like super underwater, right? So I don't know how far low it can go before he's in trouble. But Bitcoin doing some interesting things today. Although, sometimes it's like, that's as far as they get. That decline there is a little surprising. Was there maybe another headline overnight? Because that was kind of weird. The treasuries are on the downside here. They're kind of pushing the lows of the regular trading session. Must be some piece of really bad news out there that's... Well, that was 14 hours ago. Liquidation data shows only a single hour we've had 800 million worth of USDT positions getting wrecked. Longs completely liquidated, cascaded, while shorts chasing the dump got wrecked on the bounce. 1.7 billion in open interest was wiped out, and he's showing this chart, but what price is he showing this at? 26,416? Yes. Okay, so he is talking about the further decline that we had. Exchanges downtime. Multiple exchanges reported such a heavy demand in traffic their futures trading had issues or was even down entirely for several minutes. So what are the news? Markets always move first. Interesting, you could already see signs for a large major sell-off the entire day as there were top losers on the market caps. Odds are high. This is a larger entity exiting, most likely for a reason we will hear in the coming days. So they're saying, this guy is saying that he doesn't know what the news is. First comment, Evergrande filed for bankruptcy. Huge company in China that owns a ton of property and which may have big ripple effects. People were worried about this last year. Finally happened. Could get bumpy. A lot of people have Evergrande debt, USDT, possibly included. That seems awfully speculative, though. I'm a little skeptical that that's it. And you know what else, though? I find it in the Evergrande defaulting. I was aware of that. I did see that happened last night. And it's kind of weird that when they were scared of it happening before, it was like this huge run-up thing. Like the market was really concerned about it. And there was quite a bit of like panic sort of stuff going on in the market only for it to all reverse after it didn't happen. This time around, it kind of happened and like nobody was the wiser. Although I do think that some of the equity downside could be related to that. So that is just really curious to me. I think there was somebody even bigger than Evergrande that went under too, if I recall. My recollection of the news the past few days has been, I don't know, some of those things that you're kind of like not sure if they're like a big deal, and then you're kind of behind, aren't you? Let's see here. Tether says USDT reserves have no Chinese commercial paper. Yeah, these guys, man, there's a lot of comments on this here. We've been through this, blah, 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 blah. Their liquidity is definitely going on. Was it really Evergrande? When did that story hit the market? Did that hit the market during... No, I don't think it was. Like the S&P 500, it was kind of down overnight, but it didn't really accelerate its downside until about an hour ago. If it is Evergrande, then I do kind of wonder. That doesn't seem like it would have to directly affect Bitcoin, and in fact, I would think that it would affect Bitcoin less than it would like a year ago, because like China's basically banned cryptocurrency and stuff. So like I wonder if that move lower was really more just somebody waking up in Asia not liking that Bitcoin took a further dump that day and decided to scratch it, basically. China banned, but well, there is still Bitcoin over there, but I don't know if it's that major of a factor, Well, as for us over here in the treasuries, we are definitely on the downside, but we do appear to be building out some volume at 19 and 19.5. There has been quite a bit of volatility, I would say, here since we opened. It was like a down, big rise up, come back down, and we've kind of bounced in this area a couple of times. So one of the things that I think is making this hard, yesterday, one of the things that Zero Hedge suggested was that the Chinese may be dumping US treasuries in order to fund their selling the dollar and buying the yuan and propping up their currency. Because there's like a huge flight out of China. Like the money is trying to get out because of like this Evergrande and all of these other sorts of things. So I would say that definitely like during the beginning of the extended session when it's really like Asia trading, there have been some pretty big declines in the treasuries, right? But during the regular session, it's been much more varied, right? We've had like strong moves to the upside that then fizzle out and results in strong moves to the downside. But then they're not like really necessarily strong moves. They're kind of like illiquid moves that kind of stop and go. What's your average daily P&L? I'm too lazy to look it up right now, but with me trading one micro contract, it's probably around $15. Like usually I come in and I get $15, $20 and I'm happy. With like my smallest profit usually being $10 and my larger ones being like 50 to 100. Lately, I took a couple of 2-lot trades lately that fizzled out, and so then I have like a string of $30 losses that I'm really unhappy with, right? But I look back at it and I'm like, oh, okay, the number of losers in a row is a little bit unusual, but the size of them were just because of me taking on a little bit more risk, and maybe in a time where I shouldn't necessarily be taking on more risk. Wall Street Journal says global trade flows fell by 5.8% year on year in June. You like to talk a lot? Well, I try and keep want to have something going on while we're streaming, right? So you got to understand that the purpose of my stream is not for people to watch me and try and copy my trades or even necessarily copy my specific strategy of trading. Because when we're talking about edge, there is some edge in understanding the market microstructure and all of that. And I think that that gives you a big leg up on most retail traders. But what really will bring you to profitability is understanding that market and knowing things about that market that other people don't, that can help you predict what other people are going to do. That will help you see that, oh yeah, there's going to be people that are going to come in and buy this today because of, you know, whatever. So this sort of thing, like, is China dumping bonds out there, you know, that would be something that you could potentially use to predict that, okay, we're going to see like large selling here today in this situation, and I want to get ahead of that, right? That's like where the real edge comes from. And that's going to be specific to each individual person, what information that you have. It's all down to the individual doing their research and finding stuff. And when we come here into the stream, what we're doing is we're kind of sharing that information with each other and, you know, possibly coming, you know, helping to decide what the flows are going to be. But then each individual person, you know, does what they do from there. And not even everybody here trades the treasuries with me, right? And so, you know, there wouldn't be much of a point in me just sitting here and just entering the orders and me not saying anything. You wouldn't be getting anything from that, because the real information is the things that we're talking about, like trying to figure out maybe why Bitcoin was selling overnight. I think that that's like a really important thing for the market, especially if you're trading Bitcoin, which I hope none of you are, but do you get what I mean? So this idea that it was like people want to see more trading and less talking, that comes from a TA perspective, right? Your assumption is that the way that trading should work, or the way that retail trading works, is that you have some chart pattern and you follow that chart pattern and then take the trade and you make money, and I can determine if your particular strategy works or not by watching you long enough. But that's nonsense. It's just, the market is very statistically efficient. There's a reason that like 70%, if not 95% of retail traders lose money. It's because the market is very statistically efficient, and it's very, very difficult to consistently make money from looking at patterns and just trying to watch what the chart is doing and trade off of that, right? And I'm just saying that's what the science suggests. So if you want to, you know, if you want to trade technical analysis, you insist on doing it, then I'm not going to stop you in that delusion, but there's probably not the stream for you. because here we're talking about the market. That's where our edge comes from, is understanding the market. Any resources for learning this kind of stuff about the ES, please? So that's a good question, but it's also a hard question, because part of the difficulty, part of the challenge is that you're talking about a really, really wide array of knowledge. So it's unfortunately not something that I can just kind of say, oh, here it is, everything that you need to know to trade ES, right? It's going to be you going and reading the news every day. It's going to be you going and finding books and things that talk about things about the market and so forth. But with ES, there are a few things that can maybe help you get started, okay? Some things that I would recommend going and investigating, and I do have some videos about a little bit here on my channel. One of them is gamma. So the options can result in some situations where the market makers are forced to buy or sell and exacerbate moves to be able to hedge against changes in gamma. Okay, so that's one thing. If you can learn how the options work and everything, that's something that can potentially provide you an advantage. Another thing to understand is that a lot of what goes on here in the equity index futures is people hedging their portfolios And so, there's kind of this interesting dynamic between what the index actually is at the time and what the futures are. There's usually a slight difference. And there are actually situations where when that difference becomes large enough, you will see certain types of flows come in. So that's another thing that you would look at. And then, of course, understanding what the earnings calendar is and which stocks are moving and stuff. I have to say, equity indexes are really, really difficult because it is an index, and that means that there's just that much more stuff to be able to think about when you're trying to trade it, right? Okay, so it's called reading order flow for one. Well, so there are many really interesting stylized behaviors in order flow, right? I wouldn't necessarily call that technical analysis. So when I say technical analysis, I mean I look for a pattern, and then my expectation is that the market will move in a certain direction after I see that pattern with some sort of percentage outlay. Okay. So first of all, that's a naive approach to statistics because we're talking about fat-tailed markets. So once you start to factor in fat tails and you are able to collect the data for a market over a very, very long period of time, like 5 years, you're going to find that most of those things are just noise, right? And if there is an actual consistent behavior one way or the other, then the market is usually compensating for it with fat tails, which means that yes, it does turn out this way most of the time, but when it doesn't, you're going to lose more. Okay, so that's the first thing. A stylized behavior is not necessarily the same thing as like a TA setup, right? Stylized behavior would be some sort of a statistical fact that we can prove is generally true. For example, there is strong autocorrelation in the sign of orders, particularly in some of the future markets, which is to say that if I'm looking out there and I see sells right now, there's a really good chance that if I come back in an hour from now, I will still see sells, right? That's a stylized behavior. Now, does that lead to a trade? Well, that one actually can kind of help you, right? In this situation, they're selling. I think that I would not necessarily want to buy because if, they're likely to continue selling. Now, what's more interesting about that stylized behavior is why, because they went and they've done a bunch of different models to try and figure out why does that happen? Is it just because everybody's jumping on board the bandwagon or things like that? And they tried that. And the models that would kind of suggest that that's what's happening, and they weren't able to explain all of the things that we see in the market. And so they shifted around and they said, well, what if it's just large meta orders? What if it's just like one really big player is selling and they just have to sell all day, to be able to execute? And when they started modeling that, then they found that that was more accurate to the market. So that's why we come back and we say, okay, do we know something that might lead to a certain player being that large meta order buy or sell today, right? And if we know it before we see it out there in the market, we can trade and get ahead of it. And that's kind of where our edge comes from, right? That's more of a stylized behavior. So a stylized behavior can guide your trading, but it's not for a specific setup, right? Now, there are some other stylized behaviors that can give you extremely predictive behavior in certain spots. So as for instance, if there is a really extreme imbalance between the best bid and the best ask, that the smaller of the two is likely to get taken out and you will trade. So like right now, there's only 124 there at 17.5. It's very, very likely that they're going to sell that and somebody will put an offer. So if you are a robot, you could come in and sell that, and catch the edge and possibly make a tick, for instance, right? Or there is a strong correlation between the treasury and the Japanese yen. And so if I'm fast enough, I can see that there was selling in the Japanese yen, and so I should sell into treasury, for instance, right? But those kinds of behaviors where on very short time frames we're able to make highly predictive calls like that are very competitive. And we as retail traders are not very competitive with that. We just don't have the connections and the resources to be able to play that game. So we can use order flow to our advantage, but our order flow kind of becomes a little bit more like a base and a guide for us to, understand what's happening right now. But in order to have an edge, we still have to know about a flow, right? So if I know that the Bank of Japan is going to come in today and start buying, by the way, we're below 145 right now, and we're kind of coming up into it. 144.98 at the moment. So a little bit further down and we'd be back at 145, which is kind of where that kind of behavior has happened. Okay. But if I know that the Japanese central bank is going to come in and buy treasuries to defend their currency, and I know, it's going to be 100,000 net contracts or something like that, now I can use the order flow and the stylized behaviors of markets and volatility and all of these other things to predict pretty accurately how it's going to play out and thus time my trades and pick my prices better. But I can only do that because I know what the action. So order flow is kind of, technical analysis is like, I look at everything that happened and then see what the tendency is and try and trade off of that, right? What we're doing is the opposite, is we know how the market will react to people doing certain things, right? So there's still this piece over here that you have to predict, which is you have to know something that's going to predict the future orders, right? But if you know what the future orders are going to be, at that point, like cause and effect. Like there's a square root law, for instance, which is to say, like, if you traded 50,000 contracts and the market moved down X much, then if you traded 100,000 contracts, most people intuitively would think that the market would move twice as much. But we find that that's actually not the case, that the market will only move 1.5 times as much. It follows the square root law. And that's also why you'll kind of get these places where, it kind of seems like it gets stuck and then reverses and so forth, right? So that's one behavior that we can look at, for instance, that's like cause and effect. That if you go and you look at any data set where you're able to separate out large meta orders to see like who was executing them and seeing that, oh, okay, this guy, they went and they did go and buy 50,000 contracts here on this day, right? And then you could see, okay, what was the net effect on the market? And you will always come out that it follows the square root law, because this is like one of the most consistent statistical findings in all of finance, right? So it's like something that is like literally like cause and effect. It's not, well, 52% of the time, but no, it's going to do that every time, right? Now that we have that whole framework, now we have to say, what do I actually know, though? Okay. Was there a piece of economic news that they're trading off of? Is there, there's all sorts of things like that. And then if you are informed, if you are the informed trader, now you have a huge advantage, right? Because you ultimately, what's going to happen, basically, right? If you're the informed trader, and everything else is just noise. And they'll do all of these things, they make all these patterns to make you think that it's over and that it's it's going to bounce back up and all of that sort of stuff. But if you're the informed trader, there's an order and it's probably this X much, then it's just going to keep selling until that amount of orders has gone out into the market. I do love the sound of my own voice, actually. I think when most people don't like listening to themselves, but when you've done it for like 5 years and you have a nice microphone, by the way, you get used to it because what you're hearing ends up being what you expect, and it is quite satisfying. The fact that you would assume more trades with TA, so the vast majority of retail traders are trading on technical analysis, and we know that from numerous surveys and studies. It's actually quite sickening the amount, like when you're talking about day traders, and especially in the futures, the amount of day traders that are just trying to trade purely off of technical analysis is really quite astounding. You know, like, it's funny, when I did my own survey on this matter, I think it was only like 20% even knew what order flow was. Maybe I can pull up that survey. And kind of looking at this and being like, well, I should be short. But, you know, I didn't think about doing that until it was at 4.27, and we're only up 2 ticks from that. So I don't know if it makes sense to try and chase this. Oh, well, geez. You just see them go up 4 ticks. Wowie. Well, now we're definitely late. Now, there's often will be weird behavior around 16, and we just kind of like flew through that. So I don't like trying to trade it when it just went through 16. That's actually a stylized behavior that you will see, is that there tends to be more liquidity at round numbers, and 16 is basically half of a handle in ZN, right? So you tend to see interesting things at 16. Like, look at that. They almost immediately come back and start trading a little bit of volume there. So with that, I'm wondering if that was, well, let's watch it here. They may back off here and revert and start dumping a lot of volume into that area. Why does your ES book have more orders than mine? Okay, so Jigsaw has a feature. There's a reason for it. Jigsaw has a feature called tick multiplier that would it allows me to basically combine multiple prices into one. So you notice that on my DOM, it's every point, right? 43.57, 43.58. You're not seeing 43.57 and a quarter and a half and 3/4, right? So yes. So what you should see is 4 times the liquidity that you're seeing on your book. Because I don't trade ES very actively, and you know, so this kind of allows me to take a higher level view of it. And I find it quite useful. Well, now it did touch 4.27 there again, so now given trade here, if we continue to see downside action, then I don't think that I would be able to get much better than 4.27. But well, it was maybe about 5,000 contracts net short in the treasuries, and it did do it across the curve. There was also some steepening through that, which means the 30-year, well, it's mostly interesting. It was mostly between the 30 and 10, which is kind of weird because they don't quite match up, and when I look at the lows, it kind of looks like a flattener. Oh, no, that is a steepener if you look at the lows. So basically what I'm sussing out is that it looks like it's still actually a relatively choppy and range-bound market, and I'm not so sure that I should read that decline down below 16 there as positive signs that there's a really strong meta order in the market, right? Another way of looking at that is, like, if I come over here and I look at the treasury and I look at the cumulative delta, am I seeing like a really consistent decline in cumulative delta that just continually, what I would want to see is something like this, right? But instead we've got like got this thing and this thing and this thing and this thing, right? It's not actually that market. It's quite varied volume. And so I don't have super strong support for there being a large meta order sell in the market at the moment. And more to the point, because we were talking about all of that. So what am I seeing today? That's probably the thing that'd be the most beneficial to you guys, right? Well, so we still have to keep track of there's China, and China may possibly be selling out there. We also have to keep track of the Japanese yen. I think that 145 level does seem to be an area where the Japanese have stepped in before, although, they lost it yesterday. It is a Friday, so you might see some flows as they are kind of putting their money to where they think it will be safe for the weekend, right? We don't really have a whole lot of super important news today. There is like some earnings, but nothing super crazy. And so I think based on that, I should expect to see a somewhat choppy of a market with the possibility of a freak move from a central bank. Okay, when you say meta order, are you using that as a proxy for order splitting? So kind of, yeah. So a meta order is defined as an order that is so large that it has to be split up over time. So, you might be executing that order over the course of several days, right? But you can still call like all of those little mini orders that went out into the market, you combine them all together, they're all part of one big larger order called a meta order. That's why I call it that. Sometimes people will call it a block order, because what will happen is you'll go to like a block trading desk like a Goldman Sachs, and they'll say, okay, yeah, we'll trade with you. You want to sell 100,000 contracts? Well, the current price is at 19. So then they do all of their math and they say, for us to sell it at the market, it'll be this. So it'll cost you. They'll actually, the price that they'll give you will be much lower than what it currently is, right? And then they'll turn around and they'll take that huge block of orders that they just got from their client, and then they'll turn around and execute it in the market. And the way that they make money is by executing it more efficiently than the price that they quoted, right? So they'll say, well, you'll have to sell it to us for like 12.5, but then we were able to sell it and get an average price of 17, and so we're able to pocket that difference, and that's where they make money, right? Now, I don't really like to use the term block, because then there's this other thing, which is like if two participants make a really big trade off of the market, and then it is later gets reported to the market, and that's called block orders, right? On the CME. So this is one of those places where the term block kind of gets used to mean a couple of different kind of similar things. But you were saying, order splitting. It is about order splitting. It's about an order that, has to be executed over a long period of time. That's why, you'll see that pressure there for a long period of time, like hours, several hours. You're the only one buying the dip. Well, so if I don't have something that really strongly suggests that there's going to be a meta order that's like going to continually push it, I'm not going to touch it, right? So it's kind of interesting, because I did kind of call when it pushed down through there. I said, well, it would be unusual for them to not pause at 16 and build a little bit of volume, and like sure enough, they came back up to it. But then after that, they bounced quite a bit higher. Now, the thing though is, okay, what was the volume doing during all of that, right? Well, so there was a sell starting from here. So starting from about 18.5, there was a sell. And it was a change from 47 to 52. So it was a change of about 5,000 contracts, right? And now we've seen a rise of about 5,000 contracts. It's actually a little bit less. Let's say 4,000 contracts. But you notice that they move a little bit higher. This is a stylized behavior that we have, right? That because the liquidity is going to be a little bit damaged through here, it's easier for them to move back up. But it looks like there's enough liquidity in the 20 area that they're not going to push through that. So what you're seeing here is really noise. It's really noise, and it can do all sorts of funky things here within this area. So like, I suppose if you're only looking for like 2 to 4 ticks here, you might be able to play that game, but hey, you might have been wrong and you would have gotten busted there and it would have really sucked, right? So that's why I say that one for me is not worth touching. Unless I really have a strong reason to think that there's a flow out there, right? So the flow that I've kind of been interested in is like if something came in short and like they really started pushing the rates, but it doesn't look like that's happening today. All right, so 7:13. I think it's time to go and do a little bit of perusing around to see if there's any news that we've missed. Stocks are overbought relative to bonds. But nothing too interesting here on Zero Hedge. And then if I come over to the platform formerly known as Twitter. Oh, by the way, I didn't have my news squawk on there. Reuters poll U.S. economy to skirt recession. Median probability in 1 year falls to 40%. So only 40% see a recession in the next year. That's actually still like a high number, right? Let's see here. There's more stuff in here. Federal Reserve to hold Fed funds rate in the 5.25 to 5.5 range in September, said 99 of 110 economists. The Fed to cut the federal funds rate at least once by the end of 2024, says 79 of 95 economists. Oh, really? Oh, of 2024. Okay, yeah. Within the next year, I think that's actually probably a good bet. The Fed to wait until at least the end of March before cutting rates. Says half of them. Okay, so that was a good piece of information to keep in mind, although I would say it doesn't really change anything in my mind on anything. Just kind of solidifies a couple of things in my mind that my own kind of thoughts on where interest rates might be going are pretty close to in line with most economists. What are your thoughts on people dismissing or disregarding volume profiles or volume in general for the fact that dark pools exist? Okay, so I think that a lot of people misunderstand how dark pools are actually used by institutions and what the purpose of them is, because there are so many people out there on social media that get popular by insinuating that everything is sinister and that the elite are trying to screw you over, or that there's some sort of a conspiracy theory out there to, to cause you to lose money. And so one of the ways that they do that is they say that like, oh, the exchange became too fair, so they decided to make these dark pools, right? Well, that's not really what it was about. What it's really about is that if you need to trade 100,000 contracts, how do you do that, right? Well, you have to come out here into the market and sell into it. But then there's people like me, for instance, that will see your orders coming out in there and go like, oh, okay, something is up, and try and front run it. And then that's one less order that they have, and when everybody is in aggregate doing that, it has a cost to them and it makes it harder for them to execute. So what if they could just find one other person out there that was also willing to buy 100,000 contracts, right? I wanted to sell 100,000 contracts, and it happens to be somebody that wants to buy 100,000 contracts, and then we can just do that transaction at the current price. Isn't that great? right? That's great for them. Problem is, how do you advertise for that? Well, the answer is you can't, because if you start saying I'm looking to sell 100,000 contracts, then the market would immediately plunge, right? So what they did is they created an exchange where you can put the orders out there, but nobody sees them. So you put the orders out there, and then if two people happen to intersect, then they get matched up. And that's how the dark pool works, right? Well, now here's the thing. If there's one really huge hedge fund that wants to buy 100,000 contracts and another really big hedge fund that wants to sell 100,000 contracts, and they do that transaction, then does that really mean anything for us? Not really, because one guy really wants to buy it really bad and one guy really wants to sell it really bad. And I can't sort out just from that transaction alone what the market is going to do next. Now, if I knew who it was that was on both sides of that transaction and why they were carrying out that transaction, I might be able to look at their reasons and see, okay, this guy, he's making a bet on the economy that based on some sort of predictive signal that he has that is really, really effective. And this guy over here is just kind of the market maker and is able to kind of work out, or he's already taking profits or something like that. And then I could say, well, actually, this means that we are likely to sell, or whatever the deal is, right? Okay. But here's what is actually happening most of the time. What's actually happening most of the time is a large hedge fund wants to come in and sell 100,000 contracts. And there's a block trading firm, quote unquote, that generally knows that this guy wants to sell 100,000 contracts. And so they bid it up, right? And then now that block trader, he is now short the market a certain amount, right? And then he goes out and he executes that on the exchange, right? So he's doing the execution. So instead of like calling somebody up on the phone and saying we need to do a block trade and like negotiating it and all of that, you just kind of do it on the fly through the dark pool, right? So the result is that volume that trades hands in the dark pool, the majority of it does end up filtering its way into the exchange, and you actually will see the orders on the exchange. Okay. So that's the first thing, is I just want to explain that's what's going on with the dark pool. Okay. So there's some kind of, in that view that people share about dark pools, there's a little bit of misinformation in there, right? So now that we kind of have a correct understanding of markets, now we have to kind of go back into this whole technical analysis discussion, right? Because the criticism there, oh dear. Okay, I think we're okay. The assumption in there is, okay, I'm going to look at what everybody else is doing and then be able to make some sort of a decision about where the market is going to go based on what I'm seeing. And if I'm not seeing actually everything in the market, then how can I actually make accurate predictions, right? That's the criticism. But that's not what we're doing, right? What we're doing is we're trying to predict those flows, right? Because ultimately, if the market is going to move up, there has to be market orders coming into the market and taking out those offers and overwhelming those offers. And that can happen either from a lot of market orders coming in, or maybe a lot of those offers just cancel, right? But you need, in order for price to move, you have to have those orders, right? And so we're trying to predict those orders. So it doesn't necessarily matter where they came from, or if something's happening over there in the dark pool or whatever. If something happened in the dark pool, this might not change. The price of this won't change until orders are actually coming into the market. And we're trying to predict the orders. We're not trying to make some decision based off of watching everybody else. We watch what everybody else is doing because we have to understand what's happening right now. That will tell us a couple of things that kind of help us. But ultimately, we need to have something that is predictive of the future orders. Okay. So I made a video, my latest video. I talk about volume profile, and I talk about some of the deficiencies in volume profile, and kind of like go into how you can utilize that information a little bit more effectively and based on what we know to be true about the markets. So if you're into volume profiles, I'd recommend that you watch that video. Yeah, and that was a long one. That took a little while to describe. I'm surprised that I was coming today thinking I'm probably not really on, but that I was able to go through all of that without a ton of ums and uhs and everything says that actually I'm pretty keyed in at the moment. So when I'm that keyed in, that can be good because it can really help me make decisions, but it can also make me like really latch onto something. Like if I were to come in here and take a short right now, I would probably get really stubborn about it, right? At the moment, I don't think that I am seeing the kinds of flows that would support me going short. You know, if my theory was there's going to be a large meta order short, you know, I should be seeing some signs that order is actually out there, and I'm not. I'm seeing something that's much more in line with the scenario I had laid out, which is that, you know, it's a summer Friday and it's actually going to be quite choppy, and that you're going to see quite a bit of random action in this area between like 16 and 19. And who knows, maybe they do full reverse it. I mean, because they've been doing like quote unquote reversals like almost every day. Now that said, the ZB did come down a few ticks there, so. So another thing I need to note here is that the Japanese yen bounced pretty hard and the treasuries aren't budging. So there is a divergence there. I'm not seeing the dollar move. That could be might be a good spot for a mean reversion trade right there. Like I might be able to take 17 to 19 because of that. So it just seems a little odd that they're not moving with the rest of them this time. I feel like I'm missing something. I kind of suspect that the treasuries are faking it. I think we did have an opportunity to get long there at 17. It would have been really tight though, right? I don't know, even if I do get the 19, I think I kind of have to chalk that one up to maybe a little bit of luck. So when I see something like that, it, you know, there could be something else going on under the covers. So you kind of got to be cautious because, you know, that's like a pretty small trade relative to the risk that there might be in trying to execute it. So they haven't traded. Okay, there you go. They cleared 19. I guess that would have worked. Maybe you should have done it. But what would I have made over here in the micros? No, it wouldn't have been worth it for me to take it in the micros. So it was only like $5. So this is, so you know something yesterday. So yesterday we took like the one trade. I think we went short, right? And there was like a little bit of a bounce against us. And so I puked at like $40 or something like that. Later in the day, I actually took another trade and went short again. And at one point I made $40, but it kind of bounced, and I think I only made like 10 in the end. I didn't get a very good exit. And it wasn't that I wasn't trying. I actually totally tried, tried to get out at the top and like get a really good exit, but it just kind of ran away from me. But with that move down, that moved lower, like the micros didn't move very much. And so it was a combination of both the yield curve not being in my favor and also like a little bit of a change in the DVO1. Like basically the yields didn't move as much as price did in that situation. So that last move that we just had there, I'm kind of getting hints of that again. Oh yes, I saw this. I don't know why they're reporting on this like now at this time and everything, but what's one thing I'm seeing as I'm going through my Twitter feeds is Nick Timmero's pointing out that Fed Chair Jay Powell is set to speak at the Jackson Hole Symposium at 10:05 Eastern Time, which is what you expect. But ZN turned up yesterday at 1440. Oh geez, you don't want to mess with that, dude. So like, you're talking about over in here, right? So something that you got to keep in mind is that right here is the pit close. Do you see that, like that huge change in cumulative delta right there? That's the pit close. So all of this after that, you're like in low liquidity land. It's a little dangerous. Right. The move that I caught was this. I caught this thing, and then I think I got out somewhere in here. Like I was trying to get out on this thing. There was this thing right here. I tried to get out on it and I never got filled. Do you find yourself falling into cognitive bias after trading? Not necessarily. So I think that when we screw up, there's one of two things that will happen. One is that we just get a little bit too excited about something. Like I think that something really is going on and it just fizzles out and nothing happens. So that's a really frequent occurrence. And the other thing would be that the piece of information that ended up being, the thing driving orders that you needed to be in the know about, I wasn't in the know about it, or I didn't realize that it was a significant thing until well after it happened, right? And so, sometimes you just end up being wrong, right? It's another one of those things where I come into like, this is such a funny thing, because you'll hear a lot of successful traders come in and talk about cognitive biases and stuff like that, right? And I think the reason why they do that is because they're basically trying to get you to realize on your own that your approach to technical analysis is naive, right? So, for instance, you've always seen that picture of like, they have the bombers that would come back from a bombing run in World War II, and they're trying to figure out, okay, where should we put the armor plating? And so they were putting the armor plating where most of the bullet holes were. But then this other guy said, no, those are the bullet holes those are the places where it's okay for them to get hit. Look at where they didn't get hit. It's a survivor's bias. right? Well, so why are they talking about that? Well, because something that a lot of retail traders will do is they'll say, okay, here's my technical indicator, and I'm going to watch it, and I'm going to see what typically happens with that indicator, and then I'm going to try trading off of that. And so what you're going to get is you're going to get the survival bias. You don't actually understand what's going on under the covers or why the market might behave in that way. You're just seeing what happened in that one particular time frame. And so if you were to go and say, backtest all of the different candlestick patterns, right? And say, okay, bullish Haramari was the most successful candlestick pattern this year. So that's what I'm going to trade. And then guess what? The next year it ends up being dismal and you lose money, right? Because it was just noise. This is survivor's bias. Or another thing that we call it is data snooping, right? Data snooping bias is basically if you look at enough different statistical measures over a certain time period, you're going to find that one performed the best, but that doesn't mean that it's going to continue to be the one that performs the best in the next time period, right? So like the thing is if there's if there's market microstructure behind it, right? So for instance, the stylized behavior of markets. Why is there a square root law? Well, it has to do with the way that the order book works. It's an actual mathematical behavior that they've been able to model out using math to show why that square root law kind of starts to happen. And it's the order book. So any market that uses an order book will exhibit that behavior, right? It's caused by the market microstructure. So you know it's going to be consistent. Whereas when you're data snooping, right, you don't know if it's really like a stylized behavior or if it's just noise. I say that it's way more productive to start from the market microstructure perspective and say, okay, here's what we know about the market, and here's an idea that I have about what I think the market tends to do, and then I can go and see if I can find support for that in the data. So I'll come up with a model that I think models that market behavior, and then I'll play it out and do some simulations and then see if the statistical properties of my data set matches the statistical properties of the actual market, right? That's a way, way better approach, right? But it's not what our human minds want to do, right? So there's like this, like if I could go on cognitive biases and always take like a much higher level view, the ultimate problem is this: the human brain has evolved to be very good at understanding Gaussian distributions of about 200 items. So if you had a jar of balls and they were different colors, okay, and there was 200 of them, and then you threw them out on the floor, you would be able to look at those balls and tell me with relatively good accuracy, just from the get-go, what percentage of them were red and which percentage of them were white, or whatever the colors are. We're really good at looking at a statistical distribution. But what we're looking at here in markets, we're looking at things where like even some of these like simple technical analysis setups, like how often do they actually happen? You're actually, if you go over like 5 to 10 years, we're often talking about tens of thousands, hundreds of thousands of instances where it happened. And what actually did happen after those signals occurred, right? Most people don't backtest that far back. The reality is that your brain is not capable of looking at all of that data. You can only understand that question by using statistical tools to look at it, right? And then on top of that, we have fat-tailed distributions. The human mind is not very good at understanding fat-tailed distributions. In fact, the fact that like when Nassim Taleb, he defines fat tails, so it's like you have one item that's like so far out here that like that matters more than everything else in the distribution, right? If you just made money on that one element, then that would be more than all of the profits made from this whole rest of this distribution, right? It's a fat tail. But he has to describe it, and there's all of this confusion around, like, what does a fat tail even actually mean and stuff like that, right? That just kind of shows it's a concept that we have a hard time dealing with. The brain is not evolved to see that. We have to use tools to be able to do it. So that's why I'm kind of like, technical analysis is like, especially if your technical analysis is, I'm going to put a bunch of charts on, indicators on my chart and just watch them and kind of get an idea of what it does and then start trading from, my feel based on what I think I'm seeing in my indicators. So totally, completely pointless venture, guys. Your brain can't do it. Your brain literally can't do it. You need to see tens of thousands of items. You just can't do that. You're just not. If you can't like backtest it and do it programmatically, and you have like data and stats to back up, and when I say data and stats, like you want like tens of thousands of data points and at least 5 years of market data, right? If you don't have that, then it's a pointless venture. You're wasting your time. Okay. And yeah, well, if you go in and you're trying to do that, I think you're going to find that, first of all, there's a pretty steep learning curve in learning how to program it and everything, but you can get over that. And then you're going to find that you often don't have the data that you want, right? Or you go and you do it and you find out that, oh, I thought there was something there, but actually when I have enough data, it really is, it's noise, right? As opposed to what we try to do, which is we take the information that we know about the markets and we try and predict what the overall net flow is going to be for the day, right? That's taking a large number of inputs, right? So technical analysis tends to be, I have this one data series and I'm doing these different types of transformations on this one time price data series, right? Comparing this one to that one, or looking for the trends and doing smoothings and stuff like that, right? What we're doing is we're actually taking a large number of pieces of data. We're taking into account what the price is, what the orders are doing, what other instruments are doing, what is happening with current breaking news, what we know about seasonality, what we know about volatility. Like, we're taking a bunch of different inputs and then using that to make a decision, right? And that is something that the human mind is very, very good at. That's what a neural network does, is you can build this neural network that is able to take a large number of inputs and come out with one output that is a prediction of what things are going to be. Humans are good at that. That's what machine learning does. But the robots aren't quite there on being able to do this because there's just so many pieces of information and it's constantly changing, and you have to program all of that, and you can't program everything, right? To get access to all of the data in order to be able to do the training on the robot and all that sort of stuff. So that's why they're kind of a little bit behind on that sort of thing. Well, I would say we did come down a step, but it's still basically caught in the range that we were talking about. It's still given us the opportunity to go long yields at 4.27. But, well, when you look at the 10-year, the cumulative delta picture gets even weirder, right? Because, like, look at this. There was actually quite a bit of buying through all of this, and that, like, didn't really budge them at all. And then there was a pretty big iceberg in there when we, after we had dropped. I wonder if that was a block trade. That might. So I've learned that sometimes there will be block trades and they get reported, and then price will go to where that block trade happened. That might have been what that was. But yeah, that's not, especially that in one bar. Ooh, that's not my market. I know that when things really go the best for me, you're going to see consistent trend in price, consistent trend in cumulative delta, and that's not what you're seeing in cumulative delta. Cumulative delta is really quite random at the moment. If I was going to take a bet, I would take a mean reversion bet on it coming back up to 19 again. Although we already took that once, and it's been quite some time, so it's even more dangerous now than it was before. What happened at 8 o'clock? You mean 6? You mean why did the treasuries turn down from there? So you're talking about like from starting from here. And the answer is that we're not entirely sure. One of the theories out there in the market right now is that, well, something that we know is that China has been directing its banks to sell dollars and buy yuan. Now, some people suspect that in order to carry out those transactions, some of those banks have been having to sell treasuries. So every time that I'm seeing a sell like that, I'm kind of thinking, was that a Chinese bank selling? Although, you know, it's fairly late in the day for them. By the way, where's my watch? Yeah, it's like nighttime over there right now, basically. So why would they be executing at that time? So order flow, etc. didn't predict. Well, usually you're not going to get like a kind of a predictive signal of that sort, right? You know, so if we come back over here and look at this. So look at this thing right here. You see that? Let me clear that again and highlight it. See where there's like the volume is, the cumulative delta is flat for a while? And that covers the majority of that market decline, right? So why did it move there? Well, let me see here. It wasn't the dollar. Nope, it wasn't the dollar. But the 6J declined at that time. So that's why I did it. Right? So that move was correlation, right? So oftentimes when you see a strong move, like let's say in the treasuries, and there's not actually like much change in cumulative delta, then what that means is that the market makers are mostly adjusting their bids and offers based on a correlated instrument, most usually the Japanese yen. So in that particular instance, it was because the Japanese yen. But that's where, so for that one, that's where I think we got to be cautious. So if somebody was like selling the Japanese yen and they brought it all the way down to, you know, close to 145, actually they did just kiss 145, right? You know, they could be out there manipulating their currency essentially and pushing things up. Now, when I look at the treasuries here, this move up to 21 is a lot more encouraging to me. I see zigzag on your chart. Yeah, well, I'm using them to as a measure of volatility, right? So it's just so that I can really easily see how many ticks was that move. So, you know, like here on the ZN, you know, that move that we were talking about, that was down 15 ticks, up 6, and then down another 10. Okay. That's a dangerous market, actually. Like 16 ticks on ZN is a big move, right? You don't want to mess with that one. You gotta be careful about that one, at least, let's say. Trying to get better exits, not holding him when a mean reverts all the way back. Yeah, well, you know, I think one of the things that can be really hard about our style of trading is that when you're right, you can totally be right and have it just like really fight you for a while before it finally goes along with it, you know? Darn, I really wanted to get that 5.5, but it already turned back up. China bans firms from selling China stocks. To get cash, they will sell everything else that they can, foreign stocks, equities, etc., etc. Oh, interesting. Dang, I'm not catching it. Well, I think I might have to jump in there. I tried, but I think I got a really shitty position, so... Look at that. That's actually some really amazing volume right there. Just like 10,000 net contracts out of nowhere, man. I tried. I didn't even get a good spot in the queue on that one. I may be a little too slow to be trying to play that game. Oh, you got the same one I did yesterday? And they came down? Lane Hog futures gap down big time on 814. I think it was an expiration. Can you comment on that? Huge gaps downs or gaps ups? Well, gaps are a really interesting one because like when you just look at it from a technical perspective, yeah, gaps tend to get filled, right? Although that's if you put no time expiration on it, right? Like if you say that gaps get filled that same day, then no. But if you say eventually they do get filled, like usually yes. But like how far is it going to go against you before it gets filled, sort of a thing, right? But you were saying that you think it was because of expiration. That just means that like they switched over to a different contract, right? So I would just ignore that. You know, you're looking at basically think of it as a completely different instrument at that point. You held until the close. Well, yeah, I think that most of I don't know what caused kind of like that late day selling that took it to the lows, but but there was like a lot of volume that went out through on that one, and I kind of felt like that the rest of that session was noise. Like the pit close at 3 Eastern time that you get wasn't anything special, for instance, you know. I also think that some of that was spreads, because there was like the 30-year like really pushed on one move, but then when it went down the second time, the 30-year lagged. So I think some of it was like somebody exiting a curve trade, or you know, something going on in the yield curve, and not necessarily an outright move. I'm kind of interested by this whole thing that they're saying that like they banned short selling, so the Japanese will like dump all other assets. So basically they're saying that Chinese investors are selling their US stocks, right? Is this whole China situation enough to like really throw a wrench in the rest of the world economy and cause interest rates to start coming down sooner than we anticipated? Because I think that that's one theory that we've got to put out there at this point, isn't it? What's this Hillary? Oh, they're not talking about Hillary Clinton. They're talking about the storm. Hillary has rapidly intensified in just 24 hours from a 70 miles per hour tropical storm to a powerful 145 mile per hour Category 4 hurricane. Hillary is expected to begin weakening Saturday as it encounters cooler water temperatures and is forecast to be a tropical storm by Sunday night as it moves into Southern California. I see. So it won't. I was going to say if it would hit California as a Category 4, that would be pretty devastating. But a tropical storm, we've had that before. In fact, was it like 3 years ago that we had a hurricane come up through California? Really interesting stuff when that happens. And by the way, pretty big iceberg there at 23. That's kind of hampering us here. So I tried there, but I was actually almost exactly what I was worried about, which was that I was way too late. Like, this may still turn out okay. In fact, that iceberg might really help, because I'm kind of suspecting this might be Japanese yen kind of stuff. That could be something that has legs. And then, you know, that just becomes a distribution where, you know, they take another leg up. But for now, I would much rather have been in at 4.25, right? I had some orders out there and everything, but I just missed it totally. They didn't fill me at all. I should have hit in with market orders. So I think I made big mistakes on the entry execution for that. Choosing to try and hold limit orders instead of just hitting it. What's your question? I have $900. Should you buy Ethereum or Jigsaw? Well, I don't think I would buy Ethereum right now at the moment. I don't know. Maybe Bitcoin. Maybe this is buy the dip in Bitcoin, but I'm not going to be the one standing in front of that. I'm really concerned about what Bitcoin will do if they decide to take another little step lower, because I think that there are some really big traders out there underwater on Bitcoin and are frustrated on it not taking off. And kind of what I see is like the diehards put more money into it, but the larger public has completely lost interest in it, and so it's just not catching the bid to create another bull market. And it may be a couple of years before the dynamics are such that Bitcoin could create that kind of a trend on its own, you know, without the larger public interest coming in. What do you mean SOW Jigsaw trading? Well, so if you're going to buy Jigsaw, I have an affiliate link in the video description, and I would just buy the standard edition. Because the only difference between the 3 different versions is the education that comes with it. The education materials are good, but you don't really need them. It had a good tick up there, and then it got smacked down 2 ticks. Uptick in the 5-year. I think I kind of need to zoom this in here a bit. Okay, so I'm kind of detecting hints of a steepener here again. The 5-year is kind of moving up a little bit more aggressively, and the 30-year is dragging. So if I'm going to make a trade here in the micro 10-year, that means that my micro 10-year might lag a little bit. What do you mean by that? Does your PayPal... I think when you say balance, I think you mean bounce. Link to your bank if you do not have a card inserted in... I don't know. Questions about what happens when your bank account is empty are things that I wouldn't know a whole lot about. Sorry. Okay, something's happening in the E-mini. Looks like they've encountered a large iceberg at 4361. It's making those clicky sounds for me. Yeah, sounds like a great question for PayPal support. Okay, well, the 30-year did come up there. Where it looks like they did get through where the iceberg was. Yeah. Okay. Yeah. Really was big volume at 22.5 to 23. This whole thing has been big volume, hasn't it? It really did come off of those lows quickly, didn't it? I mean, yeah, there was a couple of minutes in there. I definitely could have gotten involved in this earlier than I did. But for the treasuries, that's really fast, right? And I am seeing like really aggressive trade in the Japanese yen as well. So if I can come over here and show you the chart in the Japanese yen, you can see that, you know, we had these two downside moves here, and this one right here was where they touched 145, and now they're bouncing off of it aggressively. So this does look to me like, again, they like tripped the trigger, and the central bank and everything is coming into the Japanese yen and pushing it up. Now, how far can they? Well, okay, so you can see where they've maybe fizzled out in the past. Around 144.5, let's say. But it's Friday, so I'm kind of wondering here, are they going to do something more because it's a Friday? And this comes back to, you know, if you go to, it's like the middle of the night right now in Japan. So, you know, they paid somebody to manage it for them. Probably. The 5-year is right there on the edge of those highs. This time they're kind of doing what I would consider an ascending triangle, which is not like a pattern that like I can say with confidence results in a move higher, but it does kind of suggest that there has been some pressure on this thing, right? I would say, though, that it hasn't been without resistance, right? Because a lot has traded between 22.5 and 23. A lot has. That's why, again, it's a little unfortunate, the position that I caught, because it would have been a lot better to have caught in the cotton. If they had filled me at 25.5 where I had my original order, or I had hit at 25, you know. Then I could just rest easy and, you know, take a profit here if I needed to. I'm feeling, you know, I put my watch on and Kind of got stuck to my arm here, and then I pull it back, and it's really warm. So I'm maybe more nervous than I realize. What's driving this? It's a non-news. Lucas, I believe that we're getting Japanese yen stuff again. Because it once again, for like the 5th time in as many months, they bounced hard off of 145. And it's like the buying in the treasuries just materializes out of nowhere, right? So pretty confident that this is the Japanese yen again. Okay. Stepping up to it, not trading a new high yet, but stepping up to it. Equities though, so be more specific. What about equities? Perhaps you mean like, why are equities overall down overnight? Or are you more asking, you know, why did we just flip around? Well, it's thin and volatile, definitely because of the time of year. Definitely, it's that time of year, man. Did you know, so, you know, we didn't talk about this yesterday, but I didn't know that my kids' school started yesterday. Until I woke up in the morning and they were getting ready, and I'm like, what the heck? But apparently they started a week earlier this year, but it's only the Thursday and the Friday. But like this period, like now and Labor Day, is the thin part, man. It can be tough. Is Jigsaw Professional good? Well, so I haven't taken it, so I don't think I can really comment on it. Everything that I've seen suggests that they have good education materials. Whether or not the cost of it is right for you really comes down to you. I can only say that the vast majority of the people that buy Jigsaw through my affiliate link buy the basic version. So the only difference between them is the education you get with it. So you're thinking about buying Jigsaw now? Saf must be like some Saudi prince, and he went back to his parents yesterday and said, you know, I need more than 1,000. So now he's got the huge wad to get all of the cool tools. You're in the UAE? Maybe he is. Can you see, like, it wants to go up there, but they just haven't quite found the oomph yet to do it? On the Japanese yen side, this is looking like a meta order. Like it's you know, they made the push up. I think that if they made another push, they would do it before things were completely recovered. But so you can see the way that the treasuries are trading it, where like a bunch of people are deciding to get long in here, but it's just kind of ranging in that spot. I've had decent excursions, favorable excursions, though. A 4 is okay. But usually we can get 10 to 15, so... I think it is making me nervous. Great British Pound snaps back higher, says Forex Live. Well, a bunch of things kind of snapped higher there, to be honest. So another option here, I say the Japanese yen. Well, the dollar overall has been selling, and some people have been saying that the the Chinese are like selling their dollars and their everything. So it could just be an overall dollar move sell. Next week, if you think that trading has been difficult this week, just wait till next week, because there's not a whole lot significant for us to trade off of. And then Powell isn't going to speak until Friday. So basically all week is going to be waiting for Powell on Friday. The Jackson Hole Symposium is often where the Federal Reserve will announce key policy changes, and like that's one of the biggest speeches of the year for him. So this really is a big deal. Coming back to the bottom end of this range now. I do kind of have to wonder, if it was the Japanese yen coming in and interceding at 145, I'm not sure why they would back off the way that they have, That kind of looks to me more like somebody that wants a good price. And that would make more sense for it to be the Chinese. And the fact that it seems like it was the dollar moved and like everything moved, not just the Japanese, might be more consistent with the theory that it's China. Although I don't think that China would necessarily be buying bonds. The bonds could maybe be moving more as like a combination of currency correlation and risk off. I have, the first one is the E-mini, but I have tick aggregation or whatever we call it turned on so that I don't see the quarter points, because I don't actively trade that. And so, aggregating things every 4 ticks kind of allows me to see more of a high level view. Speaking of which, over there it's like such a mess that I think I should clear my DOM here. Okay. Oh, look at that. There's the new high. Well. You know what, though? This actually is... So I said, well, if it's the Japanese yen and they're trying to shove this, they might not wait for the book to completely recover. They're going to want to continue to push it. Just ignore Zach there at the bottom of the screen. It's a P2, and I'm not on the clock yet, so we're okay. They were able to shake a lot of people out. Yeah, they were, actually. I think you're right. Well, I mean, the overall cumulative delta never really declined, but surely there was retail traders that were frustrated there, right? Surely they were frustrated at the very least. But, you know, like look at it. The way that it was kind of like coming down a little bit, and you're like feeling the squeeze and like, oh, okay, maybe it's not going to happen, and then just all at once, boop, right up to the top, right? That has got to be a central bank, man. That is absolutely a central bank, don't you think? I think so. I think central bank is doing currency intervention right now. So on that move, by the way, no, it did not. Okay, so while we were able to predict that the meta order would continue and push us higher, and it did so in quite a spectacular way, I would have also expected, because my theory is that it's the Japanese yen defending 145, I would have also had expected to see another corresponding move in the dollar or in the Japanese yen, and we did not see that at all. So, in fact, the treasuries moved to new highs all on their own. So, I am kind of wondering if this is not the treasuries on their own now at this point. For instance, somebody that's short could be getting squeezed here. There could be demand coming in from risk-off sentiment. So, you know, as I had mentioned earlier, it's kind of funny. Sometimes I'll say something and then like the market will react, and it makes me feel like the market's reacting to what I'm saying when I know that that's not true. But, you know, with what's going on in China, with them basically experiencing a financial crisis right now, I mean, it might not seem like it because you're not seeing so much, you know, it's not plastered across the news like it normally would be during a financial crisis, but China's basically experiencing a financial crisis right here. That could be something that creates a risk-off sentiment across the globe, and ergo, you see treasuries as a flight to safety. So it could also be flight to safety. So I'm seeing like 3 or 4 different possibilities here for what is moving it up, and maybe it's even more than one of them, which I think speaks well to that. You know, this could be a good trend. Now I kind of have to come back to this volume profile and look at where we're at. Okay, so the overnight high is all the way up at 28, huh? Interesting. Because that feels really far away. Would it go short here? No. Nah, I mean, it's funny because it could happen, right? Like a reversal could come in for sure. I mean, a reversal can always come in, and a flow the other way could be quite devastating, right? But I think that the aggressiveness of the orders and everything else, I think really strongly suggests like a sovereign wealth fund or just like really massive players getting involved in here. And I don't think that you want to stand in front of that. It was just like, remember on, I think it was Tuesday or Wednesday when we were getting a similar move like this, and somebody said, oh, here's my opportunity to go for the hero trade. And I was like, I don't think that's a good idea. I don't think that you want to trade against the sovereign wealth fund of Japan, right? Like, if it is because of the Japanese, okay, so the Japanese yen moved higher there on that move higher, and the dollar is falling there again. So maybe those Japanese flows are coming through again, right? If it is the Japanese yen, you do not want to trade against that, right? That is the dumbest thing that you can do is try and holding excursion against a sovereign bank, right? Because they will win, and their intention is to fuck over anybody that's trading against them, right? They're not necessarily there to make money. I mean, they know that they're going to move the market their way. They're there to fuck anybody that's opposing them. I shouldn't swear. This is YouTube. This is for kids. If like Ethan or Asher are watching this, 10 years from now, and I apologize. I shouldn't have done that. They want, if you are short treasuries, they're gunning for you right now, right? And if we saw a point where like just for instance, let's say that there was like a 15,000 iceberg at 26, right? I think that they would plow through it and start pushing it and trying to get whoever took that to puke. And we do have to keep in mind that also that we're kind of at a point where like we're definitely seeing stops like that last push higher. I definitely saw some stop orders in it, right? Just prices where, when you see the orders hit this one price, you immediately see orders hit the next price as well. So it's like they like clear everything out there and the stop orders hit and clear out two prices at once. That's one situation where you can pretty well guess that it was stops. This has been pretty exciting. So I can definitely feel myself relaxing. I was a little tense before this moved again. I think I should try and stay focused, although I think that my emotional tendency will be to want to take my win and go home. So I think that I've got to be really careful about how I do this here. But my current line of thinking is that this could easily break the overnight high. Well, we don't have a whole lot of time left either, and I will have to go at the top of the hour. From the Hill, America must show Putin we will stay the course in Ukraine. Dude, this Ukraine war thing, I feel like is just getting more and more interesting as we start to get into the political election cycle. because you just, if you're not a political watcher, just be advised, after Labor Day things ramp up. Okay. Putin and his generals are now saying, well, we've accomplished pretty much the goal that we mainly set out to, which was, or that we had kind of negotiated back to, where we wanted to control these Russian areas, right? And they do at the moment. And Ukraine has been pushing back, but their counteroffensive hasn't been very effective. The Russians just had too much time to dig in. So now what the Russians are saying is, we can just keep the status quo the way that it is, and Western support for Ukraine will die out. And then presumably, they're not saying this, but I think that the assumption would be that from there, that, yeah, then the next thing that you do is you just wait until they give up, and then you attack again, right? So that's going to be the argument now, is like, Western nations have to continue to dump money into Ukraine. Like it was already expensive. It was already billions of dollars, right? And now it's turning into a long-term commitment. Sorry, I just lost my connection briefly there. CNN Politics, GOP candidate Chris Christie on whether he'd keep Jerome Powell in his role as Federal Reserve Chair if elected. He said, I will tell you this, he's starting to bring inflation down, which is the job of the Fed. That's all he said about it, huh? That's kind of weird. Well, okay. So, we are kind of getting late into the session. So I'm kind of thinking about what I might want to do from a profit-taking perspective before the top of the hour. But on the other hand, I'm kind of seeing this stuff where it's like, it really kind of feels like the tape is trying to make itself look like it's going to turn down so that people will start going short. It looks manipulative to me, because it's kind of doing those really quickly, and the orders are still net buy. Damon's Giant Checkout has dropped Binance over money laundering and compliance concerns. Say what? Wow, I had no idea. Oh, man. I enjoy the anti-Bitcoin Twitter a little bit too much, if I'm honest. Okay, now that's interesting. There's an iceberg at 0.25 in the 5-year. Very, very clear iceberg where they just traded 1,000 into it and the offer did not shift at all. Interesting. That time the 30-year moved up. Am I wrong about the spread? Oh, maybe I am. Maybe it's flattening back out. Although that tick didn't hold. It was a good tick. I look away from it for a second and then they come back up 2 ticks. Hmm. Okay. Interesting. So I just put out one order there, and they almost immediately hit it. The 5-year is right on a big order there, huh? I don't know how long that's been there. Take the other one. So that exit wasn't actually really very good, was it? Because I got an MFE of 18 but with 2 contracts I only got 18. So I only got, you know, 9 ticks per contract. I guess $10 is okay, but like for the degree of the move and as excited as I was about it and everything, I don't think that that's very good. I do think that there's still a possibility that they just jack it right back up there to the highs, right? In fact, that just moved quite aggressively there. Oh man, they're gonna go like just as they scare me out. That's always what they do is they're like, okay, Seth, we were waiting for you, but now we're just gonna take the elevator without you. Still being a little sketchy though. A little sketchy. So this is really frustrating because you get these things where it can like move 2 or 3 ticks all at once and then like stop and do nothing, right? In other words, it's starting to go back into like that frustrating summer market despite the really quite impressive uptrend that we had today. Like, I probably could have held on to that longer. I would have very much preferred to have gotten the prices that we're getting right now, at least, right? Because I got it off at what? 36? Oh, wow. Yeah. That really came back hard. I only needed to wait another minute, and I would have gotten almost twice as much. You know what? That's frustrating. So the gist of it is that while I had the overall trade correct, my execution of it on both sides was terrible. So it is the case that the flow that we were able to tag along with was just really massive, but my execution of it was terrible. Carl Quintilla, I'd argue we've reached an inflection point where the vivid deceleration in Chinese economic momentum has flipped from a net positive to a net negative for U.S. risk assets. I'm going to stick with my view that the market will consolidate over the next few months. And then he deleted his tweet. So I don't get to see what the rest of it was. I mean, that kind of seems like a prediction, Carl. I don't know if you should be making predictions. Oh, wait, that wasn't him. It was somebody else saying that. Do you see here, by the way, too? Flattener. The 30 years is still up there. So this move back down here may not be because of the outrights. I might be still, you're right, that it kind of seems done and there's maybe some pressure to the downside, but because of the yield curve trade, I would have been able to get a better exit. Oh, I didn't see your question there, Eddie Style. So if you were to trade it, how would that work? Would your entry be on the 0 or any of the ticks in between? Just wondering how each tick aggregation work. You know what? I don't actually know. I think it does work like that. I think that it would put a bid at the price that I'm seeing there. So if I put a bid, it would put it in at 43.63. Usually when you have tick aggregation like that, there's options for you to decide which to do. But the 5-year is still playing with that big order there. It may as of yet holds. Yeah, I think, one of the things that I think has been hurting me is that I am waiting too long. Like, if I'm going to be taking an order off, I want to be taking it off when like the flows are coming in and I'm seeing like the absorption and stuff like that. Not when it's down at the bottom of the range and really all I'm doing is getting scared out before the next move up, Because if I was sitting in it still, I could be looking at another excursion in my favor before the top of the hour. I don't know if it's actually going to happen that way, though. I'm concerned that the operation, let's say, that got us to this point is over. Because does seem to me that the flows have slowed down. And the Japanese yen is kind of coming back down, too. So but I made $20. I don't think that puts me positive on the week, but I do think that wipes out some of the losses from earlier. Let's see here. Now I have to add the stupid filters. Oh, okay. So I'm still down on the week, but I'm down $14. Whereas at one point this week, I was almost down $50. So got half of it back. Now, I have to be careful. I'm going to want to revenge trade it next week, right? I don't know if we'll be getting this kind of action next week or not. Do not lose the sight that this is options expiration week. Oh, is it? I didn't even... You're right, it is. I didn't even realize. That is Tony Pasquariello. Really? Liquidity is being ebbed. Tactical nerves are suddenly a bit frayed. So one of the things that I'm thinking about right now is that in the past, the drawdown that I experienced last week would have been something that would be enough to make me stop trading. But I have been able to keep trading and even take a little bit more risk in some places. I don't think I'm super good at picking when I take risk and when I don't. I think that doing it today was okay. It definitely would have been great if I had caught the spots right? If I caught the spots right, then I would have been able to get like $40 on one contract and let the other one run, and it would have just been great, right? So what would often happen to me is like when I would get too scared about the drawdown in my account and go back to the drawing board, then the markets would like start doing the things that I wanted. and then I would have like lots of success on sim right after that, right? So I'm kind of feeling like, yeah, we'll have like next week might be a little bit of a lazy week, probably similar to this week in that you'll get crazy moves because there is stuff going on, but that the liquidity is still going to be a bit frayed and so forth, right? Hard to trade. But after Labor Day, I think that we could start to get into a really interesting market that might be favorable for our trading. I'm hoping. I'm just thinking about this, that like if I had not screwed up on both sides, it would have been like a $60 or $70 winner. Woulda, coulda. I'm thinking back on like, could I have gotten in this earlier? I don't think so, because what time did I enter into it? 49. Yeah, I think I screwed up. I think I was a little late on the draw there. I was yapping a little bit too much today. Yeah, green is green. It's true. I guess I'm spending a little bit more time on it than I normally would, like analyzing myself, because I feel like I've made a couple of bad trades as of recent, and so I'm really trying to monitor myself. Like I'm looking at this one and I'm kind of like, okay, so were you actually trading well, or were you maybe actually being a little reckless there? Well, I think that we had a good reason to go long, and we had a really strong flow on that, you know? And I also think that I was quite insightful for those of you guys that stuck around here for the whole thing, you know, when it was kind of to the downside and everything, you know, I was like, meh, you know, this isn't in line with my expectations. I mean, like, I'm not seeing like meta order short. It's kind of more in line with my expectation of just kind of going sideways, right? And then when it jumped out of there, I was immediately like, oh, okay, it's go time. Maybe the Japanese are stuck, you know, I was able to see that shift. That's one of the hardest things to do in trading, is to understand when we're in like that mean reversion, nothing's happening, and when we're in the, okay, it's go time. Right. And I made that transition very quickly, even though I wasn't paying enough attention and was slow on the draw. I also think that like where I got out was maybe a little bit of bad luck that it went that way. I kind of, you know, one of the things was that when I put that limit order out there and they almost immediately hit it, that was where I was like, it's probably going to make another push, isn't it? But I wanted out. I wanted out. It was coming back on me. It was making me nervous. And I was like, I'm not going to sit and, you know, Because I'm thinking, well, hey, yeah, they might still break 28, but they might not do it for another 3 hours, right? I'm not going to wait for that. It's too distracting to my work when I have a position on like that. Like if I've got a runner and I've already got like $50 of profit banked into it and everything, like let's just hold that. You know, but it takes a lot to get me up into that point. With where it is right now, I'd be like way too concerned about it retracing and just be watching it the whole time. No. I'm not going to do that. So while we're thinking about this, I'm kind of thinking about going around and browsing around a little bit again, see if there's anything interesting to talk about before we go in about 5 minutes. But we should look at the market's overall biggest winner, wheat. Wheat is having like a huge run up this morning. Wowzer. Oil has also, you know, been pretty volatile today. Biggest loser, natural gas, and the NASDAQ. But the NASDAQ isn't down too much, so I'd say markets are mostly positive today. And, you know, the Japanese yen has kind of chilled out a little bit. So, felt like there was something else I was noticing that I wanted to mention there. But, oh, and cryptocurrency. Cryptocurrency kind of sitting at their lows. So, we're still kind of wondering, is the issues in Bitcoin because of China and Evergrande and so on and so forth? Well, maybe, because they are still just kind of skidding along the lows. You just got a 30-second ad from Iron Beam? Oh, really? Oh, is that one you joined the stream? It should probably show you one, huh? YouTube has changed their, like I could turn on an ad for you right now, I think. I don't know how this... How do I push this button? Or, I mean, I can push this button. I don't know what happens when I push it. So if I say turn on, YouTube will now insert ads for you. Settings. Oh. Ad adds up to every 30 minutes earnings. Oh, that's interesting. Okay, well, we'll just try it balanced. But will that mean that, like, as you guys are watching live, I don't know. I guess we'll find out on Monday. Because I would hate for it to be like, you know, in the middle of the stream, it just randomly decides to go into ads, and that's kind of like not cool. And I have a button to like insert ads and delay ads now. That's interesting. I should probably take advantage of that and have like a break at a certain part point and display an ad and like stretch. I think that would be a good idea. Oh, he's reaching up there, but they didn't quite get it that time. Yeah, you know, if I had executed this the way that I think I should have, I would basically be getting out like right now. Did they reload in ZF? They never really were able to get through and press that 0 half order, did they? Although I think it did move up because I recall it being at 0 quarter. But definitely, you know, here 5 minutes before, I would be thinking about taking it off. If not, maybe trying to hang on for another minute or two to see if they broke a new high. Okay, so I'm new here. When trading treasury bonds, do you keep an eye on other... yes, I do. So do you see this thing down here at the bottom of my screen? That is the dollar. And I've watched that very, very closely. And then on my other screen, Whoops. Me, my cursor. On my other screen where I have all of the charts, have the Japanese yen. You can see I'm quite zoomed in on the Japanese yen right now because that was kind of what's been moving us around. Can you check the profiles and see the I don't know. I don't think I can. Not from there, at least. I appreciate it, though. You've donated many times. I always, to me, again, I know I've said this a trillion, like I say this every time that people donate, but like, you know, I don't live off of the YouTube. Maybe it'll happen, but like it would have to be a freak accident to make me a full-time YouTuber. I'm doing really well right now, so it's not like I need the money, but it sure feels good. I like it because the thing that I'm often doing here, guys, is like, why am I doing this? Because I often feel like the content isn't appreciated. I look and I will see that there are other people out there that are sharing just absolute nonsense, you know, like conspiracy theory, misinformation about markets. And it just drives me crazy. And they have so many followers. And then I'm sitting over here and I'm like, you know, maybe I'm just, you know, not very interesting or maybe even kind of annoying or an asshole. And like, is there really a point to me doing it? But those donations are one of the things that help me center myself back on there and say, no. Like what you're doing is very niche. Not everybody's going to appreciate it, but you enjoy doing it and you have a core audience that enjoys it and you should keep going. So thank you. Is it gonna take a new high? Oh, come on. Ah, there you go. New high. Not overnight high. Overnight high is still 28, remember. So if they get above 28, then it's like go time. Like that was the one I was waiting for. Oh man. So where did I get out again at 34? How many did I miss out on? Oh, it doesn't tell me now anymore. 4.242. Okay, so I was right here. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18. Not quite. That's only 38. Because if I could have gotten 40 out of that, that would have been very, that would have been nice. But oh well. Complementary advanced order flow trading plan. So the one that when you buy Jigsaw, the one that comes with the base package is pretty good. I've been through that one and I think it's some good stuff. And at the very least, it helps you understand what you're looking at and how the tool works, right? I haven't done the more advanced ones. Most people don't do it. And I think that you can be pretty successful without those ones. You know, I would buy the base package, see how it goes, and then if you're still struggling after a year or two and you feel like you don't understand what you're looking at, then maybe you would go for those advanced packages. You do at least make money trading if general dollar going up, do treasuries follow or move inverse? Well, so the correlation changes. So that's kind of a difficult thing to describe. But, you know, the trading had been doing really well until the last month. So in the last month, we've taken a pretty big drawdown that has taken away most of the profits that I made during the summer. So I think from the perspective of, do we turn Seth's day trading into a hedge fund sort of a thing? I think we got some problems to work out, right? I feel like our understanding of the markets is pretty good. How informed we are is sometimes lacking, but generally pretty good. But I still don't seem to handle the drawdowns very well. I've gone a really long time without a serious drawdown, but it still happens. So, well, we'll get there. Well, I don't know about that one. They ticked a new high, and then what? How many did they go? 26, 27? So they ticked a new high. They went 2 ticks. Still, I mean, it's a lot of volume trading, but it didn't actually like really jolt the market or like have stop outs and stuff like that. So I have so interested how you have the time in the day to make a multi-hour stream and still work. Are you in? No. I just live in the mountain time zone, right? So for me, I start trading at 6:30, right? And then I trade for 2.5 hours, and then I start my day job, and then I work my day job until 6. So I still work 8 hours at my day job. It's just I'm getting in and doing the stream when most people are sleeping in, and then I go to sleep early, which means that I don't have a whole lot of time in the evenings. Usually, like, I work out and then I'm done. Now, work out, maybe watch 30 minutes of a show, and then it's time for bed. I think you can't really compete with ideologies and cults like smart money concept guys. The answers you provide just may not be as exciting as some flashy concourses or beliefs. Yeah. And, well, it's not just that. I do think part of it probably is my personality. Like, I don't necessarily always put people at ease. If they have a set of beliefs that contradict what we actually know about the markets, you know, I am not the kind of person that's really able to put them at ease and lower their defenses so that they really learn and understand what's going on, right? Especially if they're a technical analysis diehard. Like the one of the things that's kind of crazy is that I have some people that will come in regularly and are still clinging to the TA cults, you know? So whatever. Oh geez, you live in the PST and you start trading at 4:30 a.m. You're crazy, man. That is so early. Ugh. Like waking up at 5:30 for me so I can trade at 6:30. That's hard. Especially since the kids and the family overall don't always cooperate with going to bed early, right? It's so much easier to sleep when my wife is in the bed. Let's just put it that way. All right, it is time for me to get going, guys. I will see you next week. Gonna be a weird week, but it is gonna be a quiet week. So I'll appreciate having you guys there to chat so we can have some fun when the market's probably gonna be a little difficult next week. And I think we still will have some opportunities. We're just gonna have to be very selective about them, right? So, anyways, in the meantime, stay excellent, team.